Hello, everybody, and welcome to episode 54 of Bank to the Future Live. We're doing something slightly different this time, and that is that we're doing a private AMA session. So normally we go public to all of our investors and all prospective investors, but this time we're doing a session just for our private investors. And so the reason for that is because we have with us today the Layer1 team. And the Layer1 team are live on our platform right now. We were working with them before the health crisis got really intense. And they were doing a lot of the due diligence with our broker dealer. They'd already secured a chunk of funding from really top tier investors like Digital Currency Group, Peter Thiel, Winklevoss Capital. Obviously the economy started to get worse and worse and worse, but the Layer1 team still wanted to go ahead and continue with what we're doing and make this available, because a lot of our investors started to split up into two groups: those that are kind of dealing with the health crisis situation, and then those that are really sad at home and want to try and get back to some kind of normality. So the commitment we gave to our investors was that we would continue as usual. Those that are in a position to be analyzing their investments and also rethinking their investment portfolio given the current situation and where they think the markets are going to go next, and what we're forecasting around the growth of the crypto market as well. So the reason that this one is a private session is because this is what is known as a 506D offering. And 506D is where, for our US investors, you would have to have already been a member of our platform, gone through all the KYC and accreditation, and had an established relationship already that we have to find according to SEC guidelines. But part of the condition around that is that you can't do solicitation outside of our members. And so this episode of Bank to the Future Live, we decided just to go live with our existing investors in the case of the US. So that's why the slight change of format, but obviously in future episodes, we'll go back to the usual format as well. So what we wanted to do really is just give an overview of the Layer1 company. We've got the co-founders here, which is Alex and Yakov. And we already created a video on the pitch, but obviously we wanted to make sure that we created an opportunity for you to get your questions answered, because due to the fact that less investors are around because they're dealing with that situation, we wanted to create a new format and try and make this as convenient for our investors as possible. So if you like this format, then we'll look to do this for future releases. We've also got Famida, who will be pulling out questions. I think we can see Aman here still. Aman, you might want to hang up because it might be pulling 5 screens in the gallery. But Famida will be pulling out all the questions. So let's start with whoever wants to go first, Yakov or Alex. Do you want to just, some people may not have seen the video, so do you just want to give a quick overview of what Layer1 is up to and what the opportunity is?
Yeah, sure. I guess I can start. My name is Alex. Very good to meet you. Thank you, Simon, for the introduction. That's very kind. Basically, we think of ourselves as the leading US Bitcoin mining company. We're fortunate to be backed by excellent investors, including Shasta Ventures, Peter Thiel, Winklevoss Capital, TCG, and so forth. And effectively, our objective is to position ourselves as the dominant global Bitcoin miner by featuring a low cost of energy model with innovation in cooling technology and chip design. Layer1's experienced management team builds fully integrated Bitcoin mining data centers that also act as large-scale energy storage systems. And our approach is that we effectively thereby become the world's most efficient converter of electricity into Bitcoin, by correspondingly having the lowest production costs per Bitcoin mined. We have a patent pending single phase immersed liquid cooling infrastructure technology that allows us to operate in regions with the cheapest electricity in the world. It allows us to significantly reduce our operating expenses. It allows us to reduce our capital expenses due to overclocking, and we can deploy and scale our operations significantly faster at a level of multiple megawatts per day. Since February of 2020, we've had our first fully integrated data center containers operating at our mining campus in Texas. And currently we're in the process of scaling that up to a full 150 megawatts by the end of the year.
Great. So can you give us context of like what 150 megawatts means in terms of the size of the whole Bitcoin mining industry?
Jacob, do you want to expand on that?
Yes, I'm Jacob. I'm the co-founder of Layer1 together with Alex, and I've been involved in crypto since 2013, very intensively. I've met very interesting people and started a venture called Genesis Mining. It's still active, very active. It's the biggest actually cloud mining company in the world still. And I have left this company in 2017. And 1 year later, I met Alex, and due to the very special environment that we both have understood that is developing or coming to this Bitcoin mining industry, we have decided to start Layer1, because there is a huge shift in what was going on the last 8 years, since 2013, since the first ASIC was introduced to the world, to what's going on right now. The development cycles of the chips have dramatically increased. So we had, since 2013, usually development cycles of 6 months. And now we have development cycles of, let's say, I would say 4 to 6 years. So it's a huge difference. And actually, this is the real opportunity, because I would never have started Layer1 2 or 4 years ago. There's no chance to compete with Bitmain and the Chinese manufacturers in terms of speed of producing new machines. But now we are in a different world. And now it's only up to how fast can you scale and how cheap can you run your operations. And we are absolutely confident that we are right now, our setup is right now the best in the world. I know that definitely. And now we are just going forward. And to come back to your question, Simon, how big is 150 megawatts? 150 megawatts is in terms of percentage of the total hash rate. I would guess it's something like, what is it, Alex, 3 to 5% maybe, something like that.
Yeah, it will be roughly 5%. With our own chips.
So it's pretty huge, but it's not where we will go or where we want to go. This is just the first step, the first iteration. And this is the energy that we have already available at our location in Texas. And this location, we have bought it. It's our substation, it's our land. And we are right now deploying already our technology. The goal is to scale much further. The goal is to scale up to, let's say, 1.5 to 2 gigawatts within realistically 2 years from now. And this would mean something like 30% of the total hash rate.
Great. Okay. So while Famida starts to, so if any one of our investors has some specific questions they want to ask around the Layer1 Technologies equity deal, then please do start asking those now, and Famida will start pulling them out. And I'm just going to ask a couple of questions before we get into participation from our investors. So the liquid cooling units, does that mean that you can essentially take your mining and while it might be located in Texas right now, if it turned out it should be located somewhere else, can you just drop it somewhere else? Is that the idea?
So yeah, effectively these data center containers are portable. That's correct. The difference is, for example, in West Texas, we can secure energy contracts for 10 years or longer for prices that are over 75% cheaper than any competitor in North America, Canada, Iceland, China, and so forth. So effectively, it's not necessary. However, that is a possibility because the outer shell is a 40 by 20 foot shipping container, because that makes life easier just to ship it literally by, by boat, by cargo, from our production factory to our mining campus. The important thing about the liquid cooling technology is as follows. One, it's patent pending. We filed our patent in January of 2020 for a very novel design where we have over 2.5 megawatts of power density per container. That is over 10 to 20 times as much as the next best alternative by any other offering in the general data center industry, not necessarily the Bitcoin industry. Any other offering is also significantly more expensive on a capital expenditure basis. The second thing that allows you to do, if you would operate air-cooled mining in regions like West Texas, where temperatures can go 100, 110 degrees Fahrenheit in the summer times, your chips would literally burn up. Other competitors, experience roughly 40, 50, 60% chip malfunctioning because of the heat and the humidity in regions that have extremely cheap electricity, however, are basically inhospitable to air-cooled mining. The third thing that allows you to do is you can overclock your chips. Overclocking your chips means you can run your chips at a higher frequency without them overheating. So every chip's frequency is basically constrained by the cooling that surrounds that chip. It doesn't necessarily mean that your chips run faster than are allowed by the producer or anything like that. However, each chip effectively has a certain speed at which it can run, given the cooling system that it interacts with. With air-cooled mining, your chips are designed for that, usually if they come from producers like Bitmain or WattsMiner or whomever, and hence they have specifications of how many terahashes they can generate per second and so forth. However, you could technically overclock these chips by running them faster and get more hash rate per chip. However, these chips would burn up. In a liquid cooling environment, that's not the case. You can significantly overclock your chips between 50 to 100%, which means that you get 50 to 100% more hash rate per chip than the usual spec. What that means for us is that because the efficiency stays the same per chip, it reduces our CapEx proportionally because we need 1/3 to 50% less chips in order to saturate the same power capacity or to generate the same amount of hash rate as an air-cooled miner, i.e., we need only 50 cents for every dollar that a competitor spends on the same amount of infrastructure and the same amount of hash rate. And the last thing that it allows you to do is also important, which is that your depreciation cycles are significantly longer. Effectively, after over 2 years, your chips look like new because they're fully immersed in an oil-based liquid that lubricates your equipment and actually increases the lifetime by 4 to 5x. So we're talking about lifetimes of over 8 years at the end of the day.
Yeah, and also to continue here, what Alex said, also the liquid cooling system reduces the maintenance cost by a factor of 10 because of the missing rust, dust, vibration, and so on. The chips are in a very stable temperature environment, and this protects all the hardware and chips on a micro level, on a physical level.
Okay, so essentially everyone else is, searching for a competitive advantage, but still purchasing from the same group of manufacturers, mainly in China. But you guys have taken control and put the power back within the organization. because you have a team that has been involved in many different processes, from chip manufacturing, ASIC manufacturing, mining, cloud mining, and various other parts of the integration, vertical integration, I think you say. I got two more questions before we take from the investor community. Trying to keep it relevant to where we are today. Two obviously major events happening now and happen next month. The first is generally there was recently a really big difficulty rate correction because the blocks went from like 10 minutes to 13 minutes as a result of volatility in the price of Bitcoin. So we had that high of 20,000, we went down to 3,000. We then seemed like we were steady in a bull market, and then this health crisis issue pops up, and we had a big correction from approximately 9,000 to 10,000 to I think it was around about 3,500, 4,000, and now we're pushing up to about 7,000. So maybe you could help us understand a bit about how price affects, and obviously the big event in May is halving, so the block rewards going from 12.5 to 6.25. What are you seeing right now in the industry? Has this choked out the inefficient players and created an opportunity? How do you deal with such volatility? And what's kind of your approach? Are you trying to accumulate as much Bitcoin as possible, or in times like this, do you have to sell all the Bitcoin in order to cover operating costs? If you could just help us understand some of these factors that go into the success of your company.
Yeah, that's a great question, Simon. Effectively, we're seeing our thesis play out perfectly, because what's happening is that any other competitor in the industry, if you can even call it such, are only thinking, basically their entire supply chain depends on third parties. They go to the Bitmain website, they order some machines, then they go rent a building somewhere in Canada or somewhere in Iceland, and then they find a co-location in order to lease electricity from some provider. And then at the end of the day, they're trying to squeeze out some small margin at the end of the day, and effectively have to take a bet on increasing Bitcoin price in order to remain profitable. That's a stupid business. That's not long-term viable, right? The difference is what we have decided, and Jakov can elaborate on his experience with Genesis back in the day, is one, you want to have a perfectly redundant supply chain that is independent of Bitcoin price swings. Because what happens otherwise is that you're always exposed with your profitability towards one supplier of your equipment just jacking up their prices by 10x or 100x if the Bitcoin price spikes by that amount. Your profitability is going to implode if that is the case. Secondly, what we're seeing is on that the time of new generations shipping to the market at a highly frequent rate is over. The development cycles of chips used to be 3 months, 6 months. Every time they would obliterate the previous generation. So it never really made sense economically to invest in your own chips, because somebody like Bitmain would just outperform you, right? They had the first mover advantage, an insane amount of capital, an insane amount of IP in order to crush everybody else. Well, now they're facing Moore's law like any other industry. And now we're seeing development cycles in the chip industry that are 4 years, maybe 6 years. We're really at 10 nanometers, then we're talking 7 nanometers as of last year. That's going to continue for a very long time. Let's not even think about 5 nanometers, which means that if you have your own chips in hand right now, and we are lucky to partner with an absolutely brilliant team called Ingenic Semiconductor, which is a publicly listed company that is a semiconductor design company. And we work with Samsung Foundry, because if you have your own chips in hand, those chips are going to be competitive for a very long time. And we get those chips at cost, which means that our chip supply is not dependent upon what the Bitcoin price does. And hence it's not susceptible to being compressed when the Bitcoin price spikes going forward. In general, from an operational perspective, we only care about our own business. We only think that if you take care of the inputs, the outputs will take care of themselves. What that means is, if the halving happens or not, we know we're going to remain profitable. We know that other people are currently shutting down their facilities right now. All we have to do is just to keep on mining, and we already win market share by doing nothing. But the difference is that now it's only in the game of, do you have the cheapest electricity at scale? And do you have the most efficient cooling infrastructure in order to take advantage of that? It used to be a game of CapEx, i.e., could I have the fastest chips and could I install them in the fastest amount of time that gave me the edge? Electricity always mattered, but not to such a degree. The only thing that matters now, because chips are commoditized and sort of the rest is do you have the technology and the IP in order to take advantage of the cheapest electricity pockets in the world? And are you able to sustain the physical environment that pertains to such locations? And that is exactly the vision that we formulated, and that gives us the edge. Even with the price drop, we currently, with older machines, even have a profit margin, a gross profit margin of over 50%. With the newer machines, it's going to be 70 to 80% post-halving. We're not talking about pre-halving, we're talking about post-halving. It's going to be even higher with our own chips going forward. So really, we don't worry too much about what the price does or what the hash rate does, because we believe that the business formula on the input side, if we do our homework correctly, the profitability of the business is going to take care of itself. And thus far, we're being validated in that thesis.
So the whole Bitcoin mining industry is a highly destructive competition. And when you know what Alexander said already, that the chip technology is getting commoditized, then you have to ask yourself, what can I do, or what can we do to distinguish ourselves from everybody else in the world, from the competition? Everybody in the world, really everybody in the world, is actually mining with air-cooled machines. Bitmain has done really, again, a very good job. They have these 7 nanometer chips with currently 30 watts per terahash. It's a very good value. But everybody is using the same technology. And to be better than the competition, you have to do more. So we are squeezing out of the same chips that Bitmain is producing and is running it air-cooled like everybody else in the world. We are squeezing out 50% more out of these newest generations miners from Bitmain. They are struggling already. We know from our tests that these newest machines are struggling already at 30 degrees Celsius to run in air-cooled conditions. And we are able to overclock it by 50% and run it at 45 degrees Celsius air temperature. And so we can run it full speed, more than full speed. We can use the cheapest electricity worldwide. So at places where nobody can go with air-cooled machines. And we have by far the lowest CapEx costs. And this is what distinguishes us from everybody else in the competition. And that due to these facts that we have accomplished and brought together, we are doing just our thing. You know, we don't have to worry. And actually, we are not absolutely thinking about what is doing anybody else or everybody else in the world. We are just doing our thing because we know we are by far the best, by far most efficient, and there is nothing to think about what the price is doing of Bitcoin and what hash rate will be available in the market. We know due to the facts that really every single puzzle, every single element that is needed to mine, we have the best options in the world, and due to that we are completely isolated from the competition. Okay. And the thing is here, we know that we are at least with the developed technology, we have a time advantage of, let's say, 2 years. And this means when somebody else would start to develop or try to develop something like we have, he will need 2 years to get there where we are now. And we want to use this time advantage to really crush the market, to crush the competition.
Yeah, just for the last point, effectively, because of the reflexive nature of Bitcoin mining, how that works, we want to scale up to such a degree so fast that we actually disincentivize other miners from also scaling up their sites, their operations, because it would no longer be economical for them to do so. So we effectively monopolize a share of the hash rate through such a strategy.
Okay, and then the final part I had in terms of topical issues and today is obviously the world is on lockdown right now. Everyone on this call is in a different part of the world. It seems like bringing mining to Texas or a state in America, you know, given the current situation in America, kind of being the most number of cases in the current health crisis, operationally help us understand how this might affect your business. Are you geographically located? Can you all work from home? Is there a dependency upon some key personnel? Is there any, you know, how are you managing kind of the risks in this new environment from maybe an investor that's considering investing, but then, you know, all of these new questions pop up as a result of this strange new world that we found ourselves in today?
Yeah, also very applicative question. Simply thus far, we have not had any issues. And the reason being is that for better or for worse, 2019, one of our priorities was to have a perfectly redundant supply chain, right? We have multiple suppliers, multiple producers, multiple factories, multiple people working on that in different geographies, such that if there would be any issue in future, we would be de-risked. And that's exactly what's panned out. You know, just to give you an example, we have 2 factories for our fully integrated container production, one in China and one in Croatia. So we're able to shift between the 2 and adjust our production given what the macro climate is like. Secondly, we have people working on site in West Texas. You're still allowed to go to work, and you know they're going to work. Fortunately, right, it's in the open air. It's a property 30 acres big. Effectively, with the security standards and the safety standards that we're complying with on a health level, and you know, of course, with government regulation and all these different things, thus far we've not had any issues. We've hired excellent managers for the site, including, for example, former Bitmain managers that are now our campus manager. You know, they realized what the real vision in the industry is, and they decided to join instead of being with you know, the outdated versions of the industry. And on the other hand, on the production side, cargo export import is still possible. We can still ship our containers. They're fully integrated at our factory, and then they get delivered to our campus in Texas. Of course, it could be that sometimes it takes a day or 2 longer. Thus far, because we did our homework in advance, we're now able to mitigate any issues that others might be incurring, fortunately. And then on the other hand, internally, from the very start, Layer1 was a very international company with multiple people over multiple locations, which means that it always was semi-remote, which means that there wasn't much of an internal transition due to the coronavirus. It's relatively distributed, relatively remote. Productivity is probably even better than it used to be, but that's just because of the company becoming more efficient over time. So yes, you know, maybe we were lucky, but we believe, again, we tried to do our homework last year, and now we're reaping the benefits.
Great. So I think this is a good time to take some questions. Famida, do you want to pull out some questions and show your face? I do want to just say before the first question is that this broadcast, we have done everything we can to ensure that it doesn't get shared with the wrong people, because you have to be an existing investor to see this. So please do respect that and don't share this outside of that. But we've also taken additional safeguards just in case this was shared in the wrong place, which is completely against our terms. Then let's say you were a new investor from the US and you tried to sign up to invest in this, then you wouldn't actually be able to, because you have to already have an established relationship with us. So you know, we live in this this world where restricting access, we do all the geo stuff and everything we can, but if you found this content through some reason that we don't, you know, that was completely against our terms, then please be known that if you tried to invest and you're from the US, then you wouldn't be able to do that unless you are an existing member and you've done your accreditation, you've got a 30 days relationship, and you're someone that has complied with all the rules around 506D offerings in the US. So just want to say that because I think make sure that so for me, do you got any questions that you can pull out for the team?
Yeah, cool. Actually, just going on what you just mentioned now, Simon. So how much longer is this pitch going to be open on the platform?
Oh, I believe at the time of this recording, we got 9 days left until we close the deal. So the Layer 1 team have already secured, you know, the funding that they need for their business. Because we just went so far together, you know, they just agreed to make this available to our investors. That they're not in a, from what they've shown to us, they're not in a position where they have to have this money, but you know, they were very generous in terms of continuing the offering. We'd worked together so far, we'd agreed to do some stuff. The world changed, but then they, you know, for our investors that are still in investing mode, they've you know, they've kept this offering open and for our investors. So
yeah, actually, so there's a connecting question that came up to what you just mentioned now, Simon. So why did Layer 1 need extra investment after the Series A 50 million raised? Is this a second Series A? And how much of the 40.5 million displayed on the pitch has been invested through Bank to the Future?
So do you guys want to take that? So I'll just give the background. This is the same round. The vast majority has been raised external of Bank to the Future, and everyone's investing RSPV. You'll be investing into RSPV, and RSPV is investing on the same terms into the same round. So I believe maybe you could just go through a bit of the funding history from your words.
Yeah, sure. So like Simon said, effectively, we've had a lot of external funding. We've had a good experience with Bank to the Future, so we wanted to see this through. It is part of the same Series A. The target in total is 49 to 50 million. There's reasons to have it as 49 for a small business qualification, which gives you a tax advantage. The cap there is 50 million, so you want to keep it slightly less than that. So 49 makes sense. And then, so 40 is external investors, and then we're considering increasing that with Bank to the Future and the SPV that we're raising through them. And then given the history, basically since October, the Series A has gotten to where it is on a rolling basis. You know, major investors include Peter Thiel, Winklevoss, Shasta Ventures, Digital Currency Group, different family offices, high net worth individuals. Also, the management team of Layer 1 has a significant amount of skin in the game of roughly 22 million of those 40. So we really believe in what we're doing, and we're actually walking the talk and putting our money where our mouth is.
The important thing, the money that we invested, and I personally actually mainly invested, is at the same terms like your investors or the investors over Bank to the Future can get. So I invested my money at the same terms.
Yeah, which is an interesting thing. I was actually watching a documentary on Tesla last night, and the company was actually going through, you know, a really, really challenging situation before it actually got like their Model S out. And one of the big signals was that that Elon Musk actually put all of his remaining funds from the proceeds of his PayPal sale into the company, which sent a huge signal on the confidence of the company, which then led to lots of other people investing. So it's when the management are putting such a large sum, it can often be reassuring to investors that they're confident in their vision as well. So that's always an interesting sign.
Definitely, that was the goal.
And also our goal will be to, Layer1 have not agreed to this, but we would love to be a part of, if they do a Series B in the future, it will obviously be a significantly higher valuation if everything goes to plan. But we'd love to do a part of a Series B at a higher valuation in a normal market conditions, given that the conditions are so obscure at the moment. So they haven't agreed to that, but that's something we'd love to participate in once we close the Series A.
Let's hope for the best.
Yeah.
Okay, the next question I have here is H3 has asked, could you reduce the minimum of investment to 1K?
I'll take the Bank to the Future side. So we don't like to change the terms once a campaign has actually been launched. So Layer1 can give you their reasons for starting at 5K. But if we then reduce it halfway through, you then get maybe a bunch of people that state, oh, well, I invested the minimum, can I reduce my investment, or something like that. And so we try not to change the terms halfway through, even though often the minimum is lower than 5K, but we knew that this one was going to be really, really popular. Obviously the market changed. We didn't forecast that a lot of our investors would be preoccupied with a pandemic. So once we've set those terms, we don't really like to change them because of all the headaches that come from that. But maybe you could share your reasoning for doing the 5K in the first place.
Yeah, so besides that, effectively at the beginning, we decided to have it at 5K just because there's only a set amount of shareholders that you're allowed to have as a company with the SEC. And, it could even, for example, restrict how many employee shareholders Layer1 could have, because, for example, one of our priorities and one of our objective is to have every employee become a shareholder of Layer1 so that everybody has skin in the game and everybody has upside exposure. And, effectively it's a trade-off with what the minimum investment size is, because it's, it would effectively directly affect the total shareholder cap that we're allowed to have as a private company. And then how else we can think about distributing that cap amongst employees, investors, and so forth.
Yeah, and on the regulatory side, there's a piece of legislation called the Investment Advisors Act of 1940. And our US SPV can only have up to 99 US investors. Now, in normal market conditions, that would have gone in from just our priority access members straight away. So we had to have a higher minimum to try and make sure that 99 wasn't just filled up with $1,000 investors, and then we hit the cap on the US straight away. So yeah, that's another reasoning. The non-US SPV can obviously take on more than 99 because that's only a restriction in the US for the US investors.
So just to further on that one, Simon, from Bank to the Future's positioning, H3 is also commenting here right now in the live with your reply, Simon. I thought in this situation you only had the one shareholder, Simon, acting for us. So I thought the high minimum was a Simon decision.
I'm not the shareholder, no. The SPV is the shareholder, not myself. I did actually invest into the SPV, so I should disclose I have made an investment in this deal through Bank to the Future personally. but I'm not the investor. The SPV is the investor. And when we work with a company on Bank to the Future, we sign an agreement to list on the platform, and then we work together around the terms that we think are most appropriate. And for each business, it's slightly different. You know, under normal conditions, Layer1 would have just gone straight away, as we said. So we needed to set the terms around what the market was at that time. And also Layer1 have their own goals where they're restricted in terms of the number of shareholders that they can take on. And whether, you know, if we have one SPV, under certain circumstances, a regulator might look through the number of investors and determine that the number of investors in our SPV is the number of investors in the company, even though it's not. You know, so it's a risk management process.
Okay. So to Layer1, PH has asked, how much hash power are you planning to buy with the funds raised so far? I'm sorry if I'm going to be asking questions that have already been answered. Yeah.
No problem. So like we said, with the 150 megawatts, it would roughly be 3 to 5 exahash, which is roughly 3 to 5% of the current hash rate. Beyond that, that would require additional financing, which we're actually focusing on, which would also be non-dilutive or minimally dilutive, simply because Bitcoin mining is a very profitable business. Once you have certainty around what are your unit economics, how much does it cost to produce, ship, and install or deploy a data center container, and then how much money does that make over time, you know, things get pretty predictable. So you can think of more less dilutive financing structures, you know, around debt financing and so forth, so that shareholders and investors, for example, in the SPV with Bank to the Future, don't incur further dilution or minimally so. Our goal, like Jakov said, is really by the end of 2021, we'll have roughly 25% of the hash rate, if not more, up to 30, which would be roughly 1.5 to 2 gigawatts. The expectation is that at this point, we will have between 30 and 40 exahash that we are running ourselves with our own custom chips. We can do that at our current West Texas site. That site is also expandable to a total of 450 megawatts. In addition, we also have the option for another site in Texas, very similar in location to where we currently are, for an additional 1 gigawatt. And we also, fortunately, through our network, have access to other locations within the United States, if that's in the Panhandle in Oklahoma, in Texas, in upstate New York, in the northern regions of Canada, if we want to go there, even in other esoteric locations around the world. So effectively, we're going to rapidly scale up. For what we have currently, we're going to get to 4 to 5% of the hash rate. And then by the end of 2021, the goal that we aspire to is over 30%.
Yeah, I just want to add here, before you take that, Jakov, you can give your perspective as well. Because this is just for existing investors, everyone has been through all their risk warnings and their quiz. So although, you know, that's Alex's expectations, this is a private company. Things can change, things can go wrong. Whenever you invest in equity, it can be diluted. You know, things can change. So normally we would have to have given a bunch of disclaimers, but because this is all of our existing investors, you've all been through the quiz, you've all demonstrated your understanding of the nature of private equity. And so you can also refer back to those as well. You know, we've got to give the usual risk disclosures and disclaimers. But you know, these are the goals of the team, and things can change, but that's what they want to do. Did you want to add something to that, Jakov?
Yes. I just wanted to. I saw a question if we plan to increase or to mine at different countries beside US. And yes, definitely, we want to do that from the beginning. Our goal was to have as much as possible redundancy, not just in production of containers, but also in mining later on. And therefore, we will definitely spread all around the world. mainly to very hot regions where the electricity is unbelievable cheap and we can go there. So we want definitely decentralize all our operations from the production of the chips until we get the full mining facilities. Everything will be decentralized, and our team sits in the middle, coordinates everything, and our team, as Alexander mentioned, is also decentralized and spread all around the world. We think, or we want highlight that we are a US company, definitely, and we want to make it strong in the US, also for helping Bitcoin, especially to push forward more in the politics and regulation, and help in that. And it will be easier for Bitcoin if there's a very strong US player, and we want to be that US player to help Bitcoin grow further. But also we want to de-risk our company, and therefore we will definitely spread our technology and operations all around the world.
Cool. Yeah, I think that was a question by KTB. So the question of like, are you going to expand in the future to other states out of the US? Europe was actually asked in there, and wind and electricity, but you just mentioned that it will rather be hot countries.
Yeah, we have in Europe. I live here in Switzerland in Zug, and I had recently a meeting with one of the biggest private equity companies in the world. It's called Partners Group. They are also in Zug. I met one of their CEOs and co-founders, and we had discussions how we could install our container solution that is actually a turnkey solution for mining or consuming energy, how we could install such a container in a wind park. They have, for example, wind parks in Europe with a capacity of 6 gigawatts. This is actually the whole capacity the Bitcoin is currently consuming for the total hash rate. And they are highly interested to optimize their production of electricity or the distribution of electricity through Bitcoin mining. And we have ideas and very, very decent interest from this sector. Because I don't know if we have mentioned it already, but what we have understood in the last couple of months since developing this turnkey solution in this container, it's basically a shipping container, and it's a shipping container because it's easy to ship it around the world to use existing logistics. But what we have understood is that our solution can consume huge quantities of electricity anywhere where production of electricity is conducted and where you have too much energy that cannot be sold or transported. We can consume the production of electricity locally, what was until now not possible. In that way, we are doing it, because using batteries, for example, to store energy when you have too much of a production, it's not possible. It's too expensive. And this is where our solution fits in perfectly.
Cool. Just checking in with you guys. We have 10 more minutes left. Did you want to go above 10 more minutes? Like, because there's quite a lot of questions.
Okay, well, let's get through as many as we can.
Okay. So following on from that, actually, you mentioned Bitcoin. PH has also questioned, if the Bitcoin price increases significantly, will you be hedging for a drop in a price, at least partly looking into the value, the dollar value of future block rewards?
Mm-hmm. That's a really interesting question. So the interesting thing about the Bitcoin industry is, you know, I kind of draw a lot from an analogy to oil and gas. You know, it's very similar, sort of being a commodity, but it's a digital commodity. It's not a physical commodity. What that means is you don't have refinery costs, you don't have transformation costs, you don't have distribution costs, right? If you produce oil, you have to pump it out of the ground, you have to transport it somewhere via pipeline, you have to refine the oil so that it can actually be useful in order to power your car or turn into kerosene for and so forth. The difference with Bitcoin as a physical commodity, as a digital commodity, is that once you produce it, once you mine it, you don't have to do anything anymore with it. Effectively, the Bitcoin that you mine are the same Bitcoin that you can use to settle derivatives, that you can lend out via services that you can use on the Lightning Network and so forth. So effectively what that means is the real only competitive advantage is liquidity. Do you have a lower cost of acquisition per Bitcoin than anybody else? And if you are the most efficient Bitcoin miner, well, then you do. Your cost base is significantly lower than anybody else, which means that if you go up the Bitcoin infrastructure stack, if you think about Bitcoin mining, then you think about trading, derivatives or on exchanges, you think about lending, you think about Lightning Network and so forth, you can price everybody else out of the market because you acquired those Bitcoin for significantly cheaper than the market price. So the next natural step for layer one, and that will come with scale, and the assumption is somewhere, it kind of depends, but roughly around maybe 50 megawatts or so, where we start incremental discovery of in-house trading, not even necessarily to create profits, but just to create security around our cash flows, right? It's you can do relatively simple things like margin loans or sell call options. You can engage with the maturing and institutionalized exchange infrastructure that's being set up. If that's backed, if that's the CME, if that's different brokerages and so forth. That wasn't the case 4 years ago, right? It's only now that we're able to take advantage of that, right? It's perfect timing, actually. So as Bitcoin price rises in scale, and as our production capacity rises in scale, we will use increasingly sophisticated and simple techniques in order to secure our profitability over different time horizons, as well as be in the unique position to actually generate even more profits, simply because we have the best liquidity, the best Bitcoin liquidity in the market because of being the most efficient mining company.
And just to add on and to maybe answer also how powerful this whole setup is, what we have currently with the newest technology available. So even if you just buy the Bitmain miners that everybody can buy, we immerse it, we overclock it. We have production costs of $1,000 per Bitcoin currently. And this is actually what shows how powerful the setup is. It's operating on an 80–90% margin profit.
Yeah, and obviously with Bitcoin DeFi being an emerging product that's going to be evolving over the next year or two, it creates some really interesting opportunities to have access to virgin Bitcoins that were mined at a cheaper cost, and what you can do with those Bitcoins once all your dollar costs are covered. So I think that's a really interesting space that's going to emerge over the years ahead.
So just double checking with you, the Bitcoin halving has not affected anything then?
No, if at all, it helps us because it flushes out all the miners that are playing a game like it's 2017. Everybody is stuck in 2017 in this industry, literally frozen in time.
It's kindergarten.
It's weird sometimes. It's kindergarten because it feels like we're the only ones, and not to be sort of arrogant about this, but it's just because we're working on this 24 hours every day out of the week, in terms of creating the future of Bitcoin mining. And we see that a lot of people made a lot of money doing very simple things, and then over time, as the industry matures, the clear technological competitive advantages manifest and become clearer. And the Bitcoin halving will be one of those milestones where the kindergarten miners are going to be flushed out.
Cool. Okay, so I actually have a comment here. It's just an ongoing conversation in the chat about the tax efficiency. So it seems like global decentralized mining company would not want to be incorporated in the US because being based in the US means US taxes even overseas. So it's not tax efficient.
It's exactly what we wanted from the beginning, because you cannot make Bitcoin significant outside the existing system. And to be significant in the existing system, you have to pay taxes as a corporate. And that's the reason why we are in the US, and we want to pay taxes. And I hope we will be the biggest taxpayer in the US, so we can have a very heavy voice in regulating Bitcoin.
Yeah, and even
correct me if I'm wrong, but China's definitely not the most efficient tax structure in the world.
No, and then as well, you know, it's not every tax is alike, right? There's different strategies you can do about being more tax efficient. You know, we work with one of the big four audit firms also to advise us on our tax management. You know, there's clear things that we can do just to be efficient about it. But like Jaco said, there's a reason to be in the US, because effectively there's a vacant position of the leading public US Bitcoin mining company. And being based anywhere else would prohibit us from achieving our goal of IPOing as fast as possible and filling that role. You know, you can see that clearly with the difficulty that other Bitcoin companies have had in IPOing in the United States and being based in, you know, relatively exotic regions. This has been deliberately decided and strategized upon from the very start.
Cool. So KTB has asked, well, commented also, I'm interested in hearing more about your ASIC developer and the fact, what is it? What did you say, Simon? ASIC. Excuse my ignorance. ASIC developer, and the fact that all the Bitmain guys used to work for him.
Yeah.
Did you want to comment on that, or?
Yeah, Jakob, do you want to?
Yes, actually, one of our team members and friends and partners is Shangfu Liu. He is founder of Canaan Technologies. He's actually the one who created the first Bitcoin ASIC ever back in 2013. And as I said, he's a very good friend of us. And due to him and his connections, he connected us actually to the best possible source of creating ASIC chip designs in the world, I would say, the most efficient ones. The company is Syngenic Semiconductors, located in Beijing. It's as Alexander already highlighted, it's a publicly listed company. Me and Alexander, we met the founder, Chang Liu, and actually it was love on first sight when we saw each other, and when we explained him what our plans have been or will be. He fell in love with the plan, and we partnered up. So, and that's it. It was 1 year ago.
Yeah. Syngenic Semiconductor is a semiconductor design company based in Beijing that's publicly listed on the Shanghai Stock Exchange, currently valued at roughly $3 billion US, roughly 21 billion yen. They've been working with Samsung Foundry for over 14 years, you know, which is over 2x the time that Bitmain has been around or anybody else, which means that they have very good relationship with Samsung, and effectively the chips that we request will always be delivered at the volume, at the quantity, at the specs that are desired. So fortunately, we have a team in Syngenic Semiconductor. Actually, the former CTOs or head of chip design of Bitmain, Watts Miner, and Canaan all used to work at Syngenic before their current ventures. So they have an incredible track record of the best ASIC chip design talent in the world. And they have the means and the resources to always supply the very best chips to Layer 1. Syngenic Semiconductor has a minor equity stake in Layer 1, and in return, Layer 1 receives the chips at cost, which means that we don't have to pay Syngenic a profit margin or anything like that. Instead, we effectively cover the foundry costs to Samsung, and hence our chips, our hardware becomes entirely independent of what Bitcoin price does, which, for example, is an issue that Yakov has faced back in his day at Genesis Mining and so forth, where you pay hundreds of millions of dollars to companies like Bitmain, and then they just end up increasing the prices of their machines 10x, 100x, or even stop delivering at the very peak, depending on Bitcoin price does. And for us, this was a priority, and we've achieved that.
Cool. So just to confirm with you, because another question also popped up around your ASIC manufacturer, is just Chinese or and South Korean?
So Ingenic Semiconductor is a Chinese company that is a semiconductor design company, right? They don't produce the chips, they design the chips. It's effectively simulations, software based. Samsung has foundries in South Korea. So it's a South Korean partner in this case.
Cool. All right, so it's 4. We've hit the 1 hour mark. How's everyone feeling?
Fine.
Yeah. Do you want to call it? Have we covered most things, or did you want to take a few more questions?
Oh my God, there's just so many questions. I'm actually picking out the best ones, really, and I'm just going by how the conversation is flowing. But there are loads of questions. I do want to say, like, please post your questions in the investor zone.
Why don't we take the other questions over to the investor zone, and they can post them there, and we'll put this video up there. As we said, this is designed just for our investor members already, so please do not be sharing this outside of the investor zone. The reason we create the investor zone is because there's very specific regulatory requirements we have to meet in the company. So some people are frustrated because they might be asking certain questions in our Telegram group, and then we say head over to the investor zone. The reason that we do that is because you have to actually shown that you understand the risks, you understand how this product works, and you've gone through many of the disclaimers. So as much as we would like to move to a just completely open and transparent world, regulations require us to keep some of those conversations in a curated environment. And also, obviously, once you become if anyone becomes a shareholder in the SPV, the forum gets closed to everybody else, and it just stays with the existing investors, and it becomes a portal for you to communicate just with existing investors and the team. So I think let's take all the if there's additional questions, then just head over to the place on the pitch where it's just got a forum link and you can ask there. We'll get all those questions out in the next 9 days, and then once the pitch is closed, we're all done there, and we can close this offering. So thanks Yakov and Alex for taking the time to add. In fact, I do want to say that you've probably added more transparency to the mining industry and the production process and understanding the industry than any other company. I've been to the Bitmain offices, I've been to the Canaan offices, I've spoken to a lot of these guys. We've had dealings with Genesis Mining. That's where we first met Yakov. And to be able to, just kind of have our investors be able to understand some of the nuances in this industry and just open it up a lot more, as I personally find it fascinating. And also the investors that join this round, they're going to get to share that journey. So I'm really glad I got the opportunity to invest in a company like this. But obviously, as always with Bank to the Future, it's a high risk, high return game. The team have very ambitious goals and the capabilities to achieve it. But obviously, this is the nature of the game. So thanks for opening up and answering those questions for our investors so that they can make their investment decisions easier and understand a bit more. And for me to thank you for pulling out all the questions. That's going to do it for episode 54 of Bank to the Future Live, in our private episode. And in the next 9 days, there'll be an opportunity to ask any questions that might have been missed. And let us know what you think. If you'd like to see more in this format, or you'd like us to adjust our format slightly, then us and the investor relations team will see what we can do for that. So thanks, everybody.
Cool. Thanks. Bye. Bye.
Thank you very
Thank
much.
you, guys.
Bye-bye.
Bye.